Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, March 16th. I hope you guys got a wonderful Friday today, and I hope you guys have a wonderful weekend. Enjoy yourselves on St. Patrick's Day tomorrow. Hey, we got a lot of data to kind of go over today, so we'll kind of jump right into it. We'll start off with the housing starts for the month of February. So back in January, we had a 1.329. On pace to do 1.329 housing starts. Forecast was supposed to dip a little bit down to 1.29, but it came in at 1.236. Now, if you look inside the numbers, the reason why there was a big drop off was because where the drop off came from was multifamily homes. So they declined on the amount of multifamily homes, but single families actually went up a little bit. So the number, even though it dropped, is not as bad as it looks. It's actually obviously still a very good number here. Now we got the building permits. We had a 1.377 million back in January, which is basically a 10-year high. So this is a very good number here. And of course, it dropped down to 1.298. So we got a little bit of a pullback after being, at a 10-year high. So now we had a little bit of a pullback. So if you look at the headline, no, it doesn't look that great. You see that drop off. But if you kind of read into it, it's not as bad as it may sound like the headline may suggest here. Uh, then we got great news here. If you look at industrial production, after January it declined 0.1%. Forecast for February was supposed to go up 0.5%, and it went up a whopping 1.1%. So industrial production got a little bit hotter here. Same thing with capacity utilization. So in January we had a 77.5% capacity utilization. It was supposed to have a slight uptick to 77.8, and it jumped up to 78.1. So a nice little uptick for capacity utilization here. This is a very good number here, actually. And then consumer sentiment. So as we can see here, last month's reading was in February was 99.7. Forecast was supposed to be in kind of the same range, but a slight dip at 99.5, and it jumped up to 102. So this is really showing us that people are actually really liking things where things are moving ahead. We're probably seeing people finish up their taxes, seeing and then looking at starting to get their paychecks, having more money in the pocket. So probably that's one reason why you're seeing a lot more people satisfied out there. The consumers being a little bit more satisfied, feeling a little bit more optimistic where things are moving. And then also here you got another good thing here is job openings for the month of January. So for December we had 5.7 million, and it jumped up in January to 6.3 million. So all pretty good news there. I mean, the first two, of course, doesn't look like it, but if you read into it, it's not so bad here. And then, of course, sentiment, job openings, industrial production, capacity utilization, all great data right there. Stock market is up. It's taken, stock market Dow's now up over 100 so far this morning here. S&P and Nasdaq are all up, which is obviously a good sign. Some of the things, the disruptions this week has been, with with Rex Tillerson's resignation, stuff like that. Anytime we got these, and especially we've had quite a few people from the cabinet kind of leaving the cabinet, it disrupts the market in the sense that investors get a little concerned as is there going to be any policy changes. They get a little squirmish because they think they see where the policy is at, where things are going to go. Now, when they see changes in the cabinet, they start wondering, is there going to be any changes in the thought process and where policy might have changed? And they have to, take a back seat as to where they're going to invest. So that's why we get a little bit of these little disruptions here. We've seen the stock market, on the decline for most of this week here. Bond market, here we are. We are down below the 25-day moving average. We're just settled those 2 days just right on top of it. It really wasn't convincing fashion. But right now we're down about 8 basis points from where we left off yesterday. Not quite enough where we're going to have a price change for the worse or anything, but pretty close to where we left off yesterday. But the concern is if you this chart doesn't show up, but we have the stochastic. It looks like we're going to be facing a negative stochastic crossover. So basically, what that means is the stochastic line and the moving average reaches a point, and we have the one cross over the other, and it kind of looks like in a negative manner. So we could see a rise up in bond market, and it was kind of the same way for the Treasury, where we're starting to get positive here. So I think we may have reached our toll here in the Treasury here, and you may see this working back its way up as well. So we're getting a little bit positive. We're up to about 2.85 so far this morning, after touching as low as about 2.8. We're settled kind of around 2.82. It's touched almost at 2.8, and then closing in right around 2.82. Range here. So we may see this going up back above the 25-day moving average here as well. All right, so pricing is about the same as where we left off yesterday. Again, I hope you guys enjoy the rest of your week. But if you guys want more data throughout the day here, just come over to Twitter. You can find me underneath Mike Bjork, and I do post throughout the day. You'll get more information as time as the market dictates. Again, I hope you guys enjoy your weekend, have fun, be safe, and we'll look forward to see you guys on Monday. Thanks for watching. Bye bye.